Good morning, trading world. It is March 22nd, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook, it's here, the FOMC announcement and how to trade it. It's here, so let's highlight things to look for that will let you know how to position yourself. There are a few things that I am looking at today coming into the Fed Day, signaling what to do for the next couple of days to weeks. First, let's look at the vol futures. This is basically the vol futures and the different expirations that are available to us. You should know that backwardation was speaking heavily a week ago, a week or two ago, about trouble being here and now. Looking at volatility now, we have returned to contango. And contango is the normal or natural order of things, where the further you go out in time, the more unknown things are, so the more likely there is trouble further out. So the VIX futures that signals this trouble, or that is kind of a measure of this trouble, it grows the further you go out. So as you can see, these are the expirations on the vol futures, 7 days left. And we try to only look at the days that have volume. So let's go down a bit. And the first day that has volume is the 28 days. We can see we're at a 2285, and that's the April expiration. Then below that, the next one to have volume is the May expiration, and it's at 2335. Let's go back a little bit. The first one, starting with the expiration today, 2155. As you can see, contango to the next one, 2495. But again, trying to find the ones that have volume. 2285. Here we go. Down to May, where we actually start to see that backwardation again, where the May expiration dips down to 2330, which means there could be some trouble waiting for us in April. And looking even further down, we go back into this contango at 2330, going back up to 2380 on the June, and then 2425 on the July. And then August, we dip down a bit, which means there could possibly be some more trouble waiting for us in July, sometime around this July, August. But that's just something to kind of make a note of right now, and kind of keep that in the back of your mind. Now, although we are in contango right now, the way things look, it could change pretty fast. But right now, we have this contango situation, which kind of puts me in a relaxed state for the moment. Now, the next thing to look at are the bonds. Let me bring the bonds up. All right, I got a 10-day, 30-minute chart of the 30-year bonds. And as you can see back here, this was a huge flight to safety. And since then, we've kind of gone range bound. In the last 2 to 3 days, that flight to safety is pretty much calmed down. However, there is support around 128.06. Keep an eye out on this area, because if the bonds start to rally from here, if they come down or touch anywhere in this area and start to pick up and rally, this could be a heads up that things are about to take a turn in the broader market. So again, keep an eye, even right here at this 129.07, because we're at a profile low, and this could be kind of a spring point to kind of reverse and start to turn around at some point. So we want to watch this 129.06 and definitely the 128.06 on the bonds as the place that could represent that turnaround, or give us a heads up, or on a shift in the broader market. All right. Now, the last thing to look at, let's go to a weekly chart on the SPY. And let's zoom in a bit to where we are now. And as I zoom in, and this is the daily chart, let me get the weekly, the actual weekly, and zoom in here. All right, on the weekly, we see big resistance up here at the 404 area. And looking back down at the 391 area, this could be big support below us. So again, the 404 area above us and the 391 area below us. Putting it all together, because today is a Fed day, and we usually get these seemingly unpredictable spikes, and usually the first move is a head fake. I say any raise in rates or any rate hike knocks us back a bit. But according to the volatility in bonds, there's enough confidence to come out of that after a day or two. After a short covering rally, it could be ambushed and joined by real buying activity. Let's just keep an eye out for that type of activity on Friday. meaning a large gap down followed by consolidation and then blast off. So that's kind of how I see everything today and through the rest of the week. At some point, we could hit an area of resistance. Don't know if we get to it today, but at some point, it could cause a reversal and a big flash down that may last a day or two. But like I said, things have kind of calmed down in the markets enough to where there will probably be enough confidence to come out after a couple days. And once people start to cover shorts and it leads to a little bounce, people will start to come in and join, and it could turn into a real bounce. So with that being said, let's get to the key levels to watch for the day, although I just gave you the main two for the next couple of days to make sure you have on your chart. All right, here we are back with the key levels to watch for the day. Starting on the resistance side, we have our jack resistance at 398 to the 399 area. Then we have our queen resistance area, 400 to the 403 area, which is going to be very important today because right here, if you notice this purple line, this is the market maker's weekly expected move. This is the upper edge of that. So there's a lot that could take place, or a lot of time that may be spent around here today. Then we have our king resistance at 404 to the 407 area. On the support side, we have our jack support at 397 to the 396 area, queen support 395 to the 393 area, and then king support 392 to the 386 area. The main thesis for today is bearish, closing below the 398.91 with a projected target low of between 397 and 386. The alternate thesis is bullish, closing above the 398.91 with a projected target high of between 398 and 407. The main channel we are in, at the moment it is 397 up to 316. The main channel below where we are is 397 down to 379. Now, yesterday, market strength and breadth trailed off from the start, gaining steam to the downside as the morning went on. It reached a bottom early afternoon and rallied from there. I expect strength to open stronger this morning and start to diverge from price action early, hinting at what is to come later in the day. We do have harmony between the technical side, which is bearish, and the quant side, which is also bearish. The futures have a bearish bias for the day, with the harmony between the technical side, which is bearish, and the quant side, which is also bearish. This is extra confirmation to find that short position for the day. This brings us to the scenarios of the day. All right, here we have our first scenario of the day. And again, we come into the day with two scenarios sitting around the same probability. So the first one that I have is going to be our rounded reversal day type structure. And it's well known that coming into a Fed day, we could have this mindless kind of float to the morning before the actual announcement. So we could get that same mindless float up, which leads to our rounded reversal day type structure. We get that continued push higher toward the Jack or Queen resistance area. Find our midday chop around either the possible Queen or King resistance before the Fed takes on or takes us on a wild spike up, then down, then settle back into a fade or a complete fade on the day. So that's how things could play out. Again, that 404 area is really important. That's a position where I would be likely to take on some kind of swing positions for a day or two, going short. So that's our rounded reversal day type structure. All right, our next scenario, which is pretty similar, the only difference is pretty much where we start out. But usually on our trend day up day type structure, we open gap up and start with that push back toward the previous close. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible Queen or King resistance before the Fed takes us on a wild spike up, then down, and then settling into a fade on the day. And this could also be known as or called a failed trend day, because there are scenarios and times where we enter the day into a strong trend day, but what reverses a trend day is the fact that we reach a target. And the target here is, of course, going to be the weekly market makers expected move, and then the 404 area that I called out on the weekly chart earlier in the video. So pay attention to those two targets, because they could bring a big failure and give us this failed trend day. Also, be on your toes for the vice versa from this, because we could actually do the opposite, where we enter into this down move first. I guess it's best as I show it again, but we can enter into this down move first, which would be a flash drop from one of those walls of worries I've talked about, and then we could come back up, get another wall of worry, and then get into our downtrend for the day. And that's going to take us to our Fed announcement, where we get our midday chop going into the Fed announcement and then coming out. It's actually quite possible that we could get another spike down, spike up, and settle in, and we could actually begin to rally from that point. So that is our vice versa on the trend day up model. All right, our last scenario is going to be our expanded range day structure. We could begin the day with consolidation, building a long wall of worry at different levels in times of the day. We could experience flash drops from these walls of worry that get bigger and bigger, with the biggest flash happening after the FOMC announcement. So walls of worry, and I guess I should draw a flash drop that could possibly happen in here, getting us back up to that area, and then somewhere in here a flash drop. And then, like I said, the biggest happening after the FOMC announcement. Definitely be on your game today. Be very, very careful. As I talk about always, please have your risk in check. And don't be surprised if that after an extremely large flash drop that we start to build back into a bounce. I'm thinking possibly Friday that things kind of shake out, and the start of that short covering gives people confidence to kind of come out and join into what builds into a rather large bounce. So as I say often, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.